we always kick off with the stock of the day, and I thought we'd take a look at a stock which divides our panel always here on the call, usually based around their ESG filter that they have on their investing. But I thought I'd take a look at Aristocrat Leisure. Playtech shareholders rejected overnight the $2.8 billion takeover proposal from Aristocrat. They received less than 55% of votes for the deal, as Playtech confirmed it was open to other proposals. Shares dipping slightly in this morning's trade. Aristocrat came up on last year as one of those quality stocks that you buy on a market dip. So Ben, what's your view on the announcement overnight, and also Aristocrat at these levels?
Yeah, I mean, the announcement's disappointing, but I think the market have worked out that this was going to happen. Effectively, a bunch of, I think mainly sort of Chinese-based shareholders has worked their way onto the register. They've refused to communicate with Aristocrat. They've refused to communicate with Playtech. So it
made it very messy, didn't it?
Very. and Aristocrat, I think the frustration is they spent so much time looking at this business, and it's dragged on even once they made the offer. And they've done the capital raising already to fund it. So it sort of leaves them in a bit of a strange situation where they've now got net cash on the balance sheet. I was on the call this morning with the CEO, and he clearly was disappointed. But this company's had such a great track record of M&A. It's made 3 acquisitions in the last 5 or 6 years. They've all been stellar. So I'd back him not to feel like that cash is burning a hole in his pocket, which is probably the bit of the threat at the moment.
Yep.
The market loved this acquisition when it was announced. It was, the share price took off. So it's disappointing, but it is what it is. And I'm sure the core business is still growing very strongly. And, I think you can back this management team to spend that money wisely. Okay,
so you've had a bit of a pullback. Would you be buying Aristocrat at $41?
Yep, definitely. It's one of our larger holdings. I think this is one of the highest quality businesses on the exchange. It's also a company which is growing pretty rapidly, but it doesn't have that high PE that a lot of businesses in that space do have for whatever reason. So, and it's quite sticky, the revenue, because a lot of it's from the US and a lot of it's recurring. So it's got that reopening sort of part to it as well. So I think it's a buy.
Okay, Mark.
Yeah, I'd largely agree with Ben there. Overall, look, I think the key is not that cash not burning a hole in their pocket. I think that management needs to be disciplined overall in terms of where they're going to go next. They've said they're not going to return the capital to shareholders, so they're very much primed for another acquisition. Our research team actually looked into a few. This really wasn't the big fish, Playtech anyway, so it's one that they were looking at was Evolution in the States as well. They've got many other options sort of lined up. They do have that great track record there as well. Look, it has dipped now. I'm a buyer as well. It's one of our current recommendations, which we released probably only a couple of weeks ago. It's just such a solid business. I think 13 of the top 20 games in the world are all Aristocrat technology. There is a cycle upcoming where a lot of the machines in the US are getting cycled out, and most of the buyers are actually buying the premium instead of the sub-premium machines, the poker machines or EGMs. And obviously the foot traffic is going to help as well in Australia because they've got that profit share sort of arrangement. So look, it's a good performer. It's it's a solid company. I think this is probably an opportunity.
And the online gaming, they seem to be doing pretty well as well, don't they?
Yeah, look, and you can't blame them. I mean, they're absolutely top of their field. I mean, they've got, like I said, 13 or 14 of the top 20 games. I mean, they really do need to vertically expand rather than try to squeeze the blood out of the stone, the final drops for market dominance. They're far better off going and using their business acumen to try and corner another market, I suppose. So. So look, as long as they don't get too itchy with that money and they pay too much for something, I think that it's definitely a buy.
Yeah. Okay.